Hello, ladies and gentlemen. It's Modern Investing on Pod TV. My name is Sasha Star, and we have our guests today, Dr. Milan Somberg. Welcome to the show.
Thank you for inviting me. An honor and a pleasure.
Great to have you. And Jim Eid from Eid Foundation. Welcome to the show, Jim.
Thanks for having me again, Sasha. Good to see you.
Yeah, good to see you as always. So, market today, although it's Wednesday, it's down right now. We don't know what will be at the end of the day. I think that upcoming reports on PPI and CPI are weighing heavily on investors' sentiment. And my favorite stock, Nvidia, is heavily down today. It seems to me that there is a disappointment with upcoming listing of the stock that Nvidia was trying to acquire last year, ARM, and Amazon is leading subscriber for IPO, although Nvidia participates in it as well. Nvidia still by far is the most reviewed and popular stocks, so I don't think that this is something to get worried about. As I said before, I sold heavily in the money calls, the covered calls on Nvidia, so I don't worry about it. Even if Nvidia will go down to 415 at September 15th expiration date, I wouldn't worry about that. And if I will be assigned, I don't mind to have not assigned, but the stock will be taken away from me. I will turn next day and will buy it back at whatever price. I may lose some, I may win some, depends on the situation. So that stock, I wouldn't worry about it at all. My other positions also heavily protected, including AMD stock, Microsoft, and Netflix. Speaking about Netflix, today I initiated new position. I sold covered calls. Let's see. I sold, first of all, I bought back earlier covered calls at a profit, and sold September 22, 435 calls, generating $19.45 per each call that I sold. So that provides me a cushion of almost $20 to, if stock is now 430, so if it will go down to 410, I don't care much about that. And if stock will be taken away from me, same thing, we'll buy it back. It depends on what price it will be. Or maybe I won't even buy it back, but sell cash insured puts. Depends on the situation. Again, I'm not going to tell right now what exactly I will do, because it depends on the market situation, the position of the stock at that time. So that's quite obvious. So what else are you doing, guys, these days? Milan, let's start with you.
Well, you said that you sold some covered calls on NVIDIA, and if you are assigned and if it's called away from you, you will buy it back to be able to sell covered calls again. Now, instead of buying it back, why wouldn't you sell cash covered puts on it?
I just said about 25 seconds ago that that's one of two possibilities. Okay. And in fact, selling puts is, you see, but I must admit one thing. If you are buying stock and selling covered calls and the stock is going higher, your position is more aggressive versus selling cash covered puts, because you basically foregoing all upside. Now with covered calls you also sacrificing some upside, but degree if you don't have a stock and have sold a cash covered puts. But in either case, most of the times you are making money. So
If your stock is going up, you're better off holding the stock than writing covered calls on it. You're
not
better off
necessarily.
holding the security.
Not necessarily. You see, Milan, we are going into some turbulence sooner or later. And traditionally, September, October, even sometimes November, are very, very difficult times for the stock market. And the correction is sooner or later will happen. I don't believe that the stocks will continue to go higher and higher and higher each day. That's not going to happen, and it's not happening even right now as we speak. So if that's what we're witnessing yesterday and today is sort of a technical correction, and then stock will continue. It depends on the the PPI reports. So maybe the stock will continue its advance. Depends on the reports.
The longest period of market decline was during the Depression in 1929, and the market declined for 4 years. That's the longest period of market decline. So you know that in the long run, which is anything longer than 4 years, it's going to be on the upside. And probably the 4-year decline will never happen again, because during that period, when the market crashed in 1929, the margin requirements were 10%. And people were using that. Today, they're 50%. They were 10% then, and people were using them to gamble. And so that will never repeat itself. The market will be up higher in the future. Now, to what extent should we be worried about Fitch Ratings downgrade of the U.S. credit from top AAA to AA plus?
Jim, would you like to answer that?
Yeah, I think that's worrisome, but I think the market has already priced that in. That was a result of the Republican congressman being so stubborn and raising the debt ceiling so that we could pay our bills.
Yeah.
You know, it was like running up your credit card and then not agreeing to pay the charges. We always do this. We always pay the bills. But sometimes we go into these crises, and government shutdowns have actually happened. And in this case, this trying to get some hostage taking by the Republicans in Congress in order to raise the debt to pay our bills resulted in this lowering of our credit, because markets were concerned. Global markets were concerned. Global banks were concerned that if we defaulted on our debt, that would be a tremendous financial crisis in the world. And we played, we ran it right up to the last second with that. And it was very bad policy, very unpatriotic. However, we're just seeing the consequences with our debt being downgraded, our trustworthiness being downgraded. But I do think it's been priced into the market already. think we've seen the consequences of it.
Yeah, the efficient market will price in eventualities all the time. That's true. Let me give you a list of credible authorities and investors who are not concerned about Fitch Ratings downgrade of the U.S. credit from AAA to AA plus. Here they are, 5. Warren Buffett, chairman and CEO of Berkshire Hathaway, who is an immense investment success. Then Jamie Dimon, chairman and executive officer of J.P. Morgan. Larry Summers, former U.S. Treasury Secretary. Yeah. Paul Krugman, Nobel economist. Janet Yellen, U.S. Treasury Secretary. They call Fitch's move bizarre and ridiculous. U.S. is the most prosperous and most secure nation on the planet. U.S. Treasuries are one of the safest assets in the world, and the U.S. has never defaulted on its debt or missed a payment. So what's the result of that is that foreign investors are concerned about the inflation, which is soaring, and a global slowdown, are keeping their cash in the U.S. currency. The U.S. dollar rose to a 20-year high this week. So the concern of foreign investors. Yeah, the U.S. dollar versus the Canadian dollar is up 0.015 dollars, which translates to $15,000 per million. So I only have SPY in my core portfolio, which tracks the U.S. market.
Right.
And so SPY went down last week, but
Right.
my portfolio went up because I'm in the U.S. dollar. So
Your buying power around the world increased.
yeah, that's right. So I don't think we need to be concerned about that.
Yeah, I agree with the overall sentiment that those people expressed, is that, you know, the credit really wasn't an issue. It was just the recalcitrance on part of the Republican Congress, and the power posturing and all this nonsense. So the Moody downgrade was a result of that, but it's not a reflection, an accurate reflection of the overall state of the American dollar, for example, as you've been pointing out. And so I think that we can safely ignore that. The other thing that we can't really safely ignore, but I wish we could, is the inflation news, which the Fed tends to overreact to, in my opinion. And raising interest rates has a stifling effect on the economy, it has a stifling effect on new businesses starting. And I wish the Fed would cut it out and let these businesses grow. When the problems of distribution, for example, that are causing a lot of this inflation, you know, small businesses come up and plug those holes in the distribution system. And so discouraging them from starting and doing that just prolongs the suffering. So I think that the Fed should cool it. This inflation news is really not as dire as we've been led to believe. The recession that people have been preaching for the last 2 years has not yet materialized. I don't see it happening, but I do want to second what Sasha says about the stock market in general, about September, October, these being kind of difficult months to navigate, which is why I do a lot of purchasing in November. And, you know, last year I picked up NVIDIA, Taiwan Semiconductors, Palantir. Is that the way you pronounce it? Palantir. But in any case, I made a lot of acquisitions. And although in the recent couple of weeks, you know, there's been a downtick, you know, it's been green all the way.
Yeah.
And so I just don't pay attention to little downticks. I don't get upset. I don't get panicky. You know, they were good calls, sound companies. I'm not worried.
Yeah, the corporate reportings actually are pretty good and keep coming pretty good. Now, PPI and CPI numbers are heavily weighting on possibility of either raising further interest rates or keeping them the same. We'll see what the numbers are, because remember that Fed is not operating in a vacuum. They're basing their decisions on real numbers. So these numbers are quite important. Now, Jim, to what you're suggesting, that the largest period of time when the stock market went down was 4 years. Frankly, for me, 4 months is too long time.
That was Milan, but yeah.
Because if, let's see, if I generated 160% return in the last 9 months, I'm not going to give away that so easily. I will protect that.
Yeah.
Frankly, generating scenarios is very possible. Stocks are being taken away from me as a exercising of the options, and I may not for a while initiate new positions too. That's not should not be taken out of equation, because I want to protect my gains, and I don't want to sit for a month in red, waiting until market will turn around. I'm better off to buy stocks when market is about to turn around, and I see the evidence of that. Then and only then. So I may, for example, if my position on NVIDIA, sometimes 400 or 500 shares, I may end up with having only 100 shares as just to be there and have cash to support that with the further buying once the stock and stock market, of course, as a whole, will start turning around. Because you see, with stocks like Nvidia and others, there is a possibility, although it's a great company and great stock, but because of the overall market downturn, because of interest rates, because of the somewhat mild recession or so on, that stock could go down. It could go down to $375 a share and 380. Knowing how volatile is that stock, that's quite possible. So obviously, I already cut down on the number of shares. At present, I have only 200 shares. So I'm
Yeah.
watching.
Well, Sasha, I agree with you. I've always admired the way that you hedge and protect your investment strategy. With Nvidia, for example, it hit my it doubled when it hit 360 in my portfolio. So I took some off.
Yeah.
You know, so now I feel like I'm playing with house money. If
Yeah.
it goes up, great. You know, if it goes down, I've already broken even.
Yeah, right. Yeah.
Okay, I have 4 positions right now in my portfolio: AMD, Nvidia, Microsoft, and Netflix. All are being played with house money, all of them. But that doesn't mean that I will give away my gains. No, it's house money, but
Yeah.
right now it's my money. So now
You know,
my money is on the line, although it's essentially house money, but it doesn't matter.
one aspect of modern investing is momentum investing. When the stocks go up higher, you buy more. And
Yeah.
the trend is your friend until it
Correct.
isn't. And the stock is much more likely to continue than it is to reverse itself. But someday it will reverse itself.
Yes.
Our approach,
Almost always, yes.
the Monday Morning Millionaire approach, is that when a stock go down, instead of getting out at 7%, I think that's what you recommend, we buy more because we're buying bargains.
Yeah.
And what's wrong with buying bargains, particularly?
You know, I'll tell you what's wrong, because a friend of mine, when Nortel was going down from
Oh, yes.
to 160, he was prepared to take mortgage on his house and buy as many shares as he could. And I asked him just one question: why wouldn't you buy more at 155? Who told you that 160 is the lowest entry into the stock?
Good,
155 could be a better
Good
price.
point that you make there. However, you're talking about individual stocks, and we at Monday Morning Millionaire talk about the
Good
U.S.
point.
market as a whole, and the U.S. market as a whole will recover. As I mentioned earlier, the longest period of decline was for 4 years, 1929, and so nearly 100 years ago. That was the longest period of decline, and we'll never see it again because the margin requirements, which they had then at 10%, were used for gambling. People are not gambling so much anymore, although, yes, you can gamble in the stock market without leaving home. But in the long run, the U.S. market will recover. Many stocks will not. Nortel did not. There's a great example. And there are other examples of
Yes.
stocks that fell out of bed and never recovered.
Milan, I would like to mention that let's forget about the Great Depression situation. Let's come back last year, 1922. The correction was several months long. It
Yeah,
was
That's right.
from February to
It was
approximately
a rough year.
October, November. It's almost all year. And if you were trying to buy on a dip or do any other strategy, hold on to average down to whatever, you would lose more and more and more money.
With individual stocks, you would. And with the U.S. market as a whole, you would temporarily, but not in the long run.
But temporarily, if your position is losing 25% and the margin requirement is 25%, you lost 100% of your money.
Well, you shouldn't be in a margin position.
Okay, so now you're playing with the positions that you are using only your own money. You don't take a margin. So losing 25% of your own money, how much time it would take to rebuild the lost 25%?
Well, first of all,
It will not have to rise 25%. It will have to rise 37.5%.
oh no, that's true. That's true.
So essentially, it will take you a year to rebuild your position as you had in February of 22. So it's almost 2 years since you were trying.
Or you could get into the market in November of 2022 and then be just looking at gains.
So, okay, hold on, Jim, but what you had before November? So it means that you're out of the market. So you
I had a lot of cash.
excellent. So if you're out of the market, you preserve your cash and you're waiting for turnaround, and you see that it's actually happening. It doesn't mean that you have to buy at the very lowest point. Very few people.
No, I never try to time it perfectly.
Yeah, I can't do
Oh,
that as well.
you can't-
I'm better timing to sell at the highest point. There are several stocks. Even my broker, because on the core portfolio, I have a broker. So when I sold Enbridge at $44 a share, he was impressed because it from that point on and went down. It's trading now at $37. It has great dividends and so on. There are a lot of positive momentum there. I may even buy. It's not my cup of tea, but for core portfolio, I may buy Enbridge just as well. It pays
No,
great
one
dividends.
thing we haven't mentioned, which is really important, and that is more market gains arise from appropriate asset allocation than they do from picking individual stocks or timing market. Picking stocks works occasionally for me only with hindsight. Picking stocks with foresight successfully hasn't worked for me, as it hasn't worked for the majority of investors who trail the market by 40%. But if we have a 50-50 asset allocation,
I think asset allocation is a great point.
Yes, Milan, could you give me an example of a hindsight that you were mentioning?
of a what?
What is a hindsight? You're mentioning several times a hindsight that some people were buying stock on a hindsight, and you would buy on a hindsight. What that means to buy stock on a hindsight? How does it work?
I don't think I understand what you're asking. Spell insight for me.
Hints. You mentioned that you're buying on a hindsight, which means you're getting some appropriate or very specific and maybe
Oh,
exclusive.
2020 hindsight is what he was saying.
Okay.
Hindsight.
Hindsight, right?
Okay, I get it. Hindsight, yeah, that's right. Hindsight works for everybody. But
How does it work? Can you give me an example?
most investors trail the market by 40%. Now, Wall Street is not our friend. They want us actively trading. They want us actively picking stocks, neither of which works. Asset allocation, appropriate asset allocation, contributes more to portfolio growth than picking stocks or timing markets. So,
Milan, could you tell us exactly answer to my question?
Well, hindsight is basically, I'll take this, Milan.
Okay.
Hindsight's basically looking back and seeing what's already happened and saying
Yeah.
something like, oh yeah, I knew that was going to happen. So you're always right because you're looking backwards at what happened and saying, yeah, I predicted that.
it's called charting. Chartists do that, right?
But wait a second. But how it can benefit you? How can you make money out of it?
No, he's not saying that it would. It was just saying that it's something that people say. With hindsight, everybody's a genius.
Yeah.
But projecting forward, not
you.
everybody is that smart.
Thank you. Yeah, actually, you're right. Yeah, Jim, I keep mentioning all the time that 40% of investors lose in the market because they're behaving in the ways that Wall Street wants us to behave. They're not.
And I've been talking about some of the things that I did smartly, and I'll just talk a little bit about what Milan is saying. Is one of the stocks that I picked. I talked about getting into the market again in November, and I did so in a pretty broad range. One of the stocks that I picked, Sasha, we've never talked about this, Wix. And I invested in it, and it's a technology stock, and I thought it was going to be in the broad bucket of stocks that I was picking were going to be very useful. AI, all these types of things, companies, and Wix was one of them that I picked. And man, it's pretty much laid an egg for me. So nobody is 100%.
No, I'm not suggesting that somebody has to be right 100%. I'm not right 100%.
No, but you protect yourself well. Yeah.
I'm protecting myself.
Yes.
My investments.
How did you pick Wix, Jim? Did you use fundamental analysis?
Well, it was pretty much looking at what they were doing and looking at the environment around it. And it was generally, I was thinking, with AI coming, these stocks that are positioned like NVIDIA And I also was backing semiconductors at that point too. I have AMD stock. I bought Taiwan Semiconductor, and so the idea was that I thought it was ripe. I thought it was like poised to take advantage of the coming environment, which is going to be an explosion. And we've seen this activity in even like everyone knows what Zoom is now. And a few years ago, no one knew what Zoom is.
Yeah.
And so all of these companies that were supporting these high resolution, broadband type of companies, these are things that are of interest to me at this time in the life.
Okay, you were not able, am I correct in saying that you were not able to assess the quality and the integrity and the ability of the management, which really counts for a great deal. Now,
I agree. That was a weakness for me. I was looking at earnings, and the earnings were good, and I thought that they projected well into the future, but I did not assess the management team.
Now, assessing management is nearly impossible because they know how to hide. You can legally change every line in a financial statement except the top line. And so now there has to be an exchange-traded fund which tracks a large number of semiconductor stocks so that you buy the idea rather than picking individual stocks. There are such ETFs.
I agree.
They have to be. Now, wouldn't that allow you to benefit from the growth without accidentally or involuntarily picking a losing stock, which could happen?
And which has happened to me. And you're absolutely right. And if we're talking about my core portfolio, I do have those types of investments.
Yeah.
However, in my fund portfolio, I have enough confidence that you might call it cockiness when it comes to this. And I think that I can pick the winners. Now, I don't recommend everybody be cocky because, all of us can't be successful. But if you do have confidence in what you're doing and you do trust yourself to analyze information and make good decisions, especially it's discretionary money, you could afford to lose it if you play it wrong. Then why not? It's very entertaining to me because when I'm right, it's reinforcing. And when I'm wrong, I analyze and say, why was I wrong? And I learn.
Is it true, though, Jim and Sasha, that when you buy a security, individual security, rather than the market as a whole, you buy a security, you're buying it from someone who is selling it? Can both of you be right?
Milan,
I'm always assuming I'm right.
We discussed that issue several times.
Yeah, of course.
This attitude, there is never a time for you to buy a stock, because even if you're convinced that it's a winner and you're going to make money or so on, but you will think that, hey, if I'm buying that stock, I'm buying from someone who sells. Maybe that someone knows more about this company than I do.
Yeah.
Maybe he is right and I'm wrong. No, I'm not going to buy that stock. I'm not going to buy another stock. Even if you buy SPY units, you're also buying from somebody. You're not buying it from the vacuum. You're buying from somebody. Yeah. So you eliminate any possibility to buy anything simply because
also, I sold NVIDIA when it doubled, and I still have some. So, it's not like I sold all of it. So I still believe in the company, but I was, making sure that I never ended up a loser. I was
but this is the classical situation.
So I'm still selling. So if somebody's buying those things.
Exactly. So this is the classical situation when both seller, which is you, and buyer, which is somebody enrolled it to $480,
right.
He's right and you are right.
He's happy, I'm happy.
That can happen. Let's talk about SPY for a minute. If you're buying SPY, you are buying it from someone who is selling it.
Absolutely.
And both of you be right. Well, with SPY, which is what the Monday Morning Millionaire members, we have about 300, hold in their core portfolio, that they both could be right because someone is selling to the buyer because he needs to buy groceries and pay the rent.
Not necessarily. No, because what if he's like Jim, doubled his money on SPY, and he's got his investment objectives, and he wants to get out of it and buy something else, maybe NVIDIA, maybe some other stock. So he wants to raise cash.
We recommend against buying individual stocks because, as we mentioned before, with hindsight, you can pick them. With foresight, most investors cannot.
I think that's a strong message, Milan, and I agree with you. And there's people like Sasha and myself who can afford to have fund portfolios. And I think that what we're talking about is that people like that in your core investments, we're much more conservative. But in our fund portfolios, we do tend to take more risk.
Yeah,
My last transaction in my core portfolio was selling Enbridge at $44 a share. I haven't done any transactions since then, and that transaction was sometimes a year, maybe even more than a year ago. So here we go. The core portfolio, okay, it's a core portfolio. I'm getting dividends,
Right.
and I'm taking dividends out once or twice a year. That's about it, and I don't do anything there now. But I'm very active in my fund portfolio.
Yeah.
And now, speaking about stock picking, am I that smart to pick up these 4 stocks, AMD, Microsoft, Nvidia, and Netflix? No, I'm not that smart.
you are.
But if you're doing,
You're not
no,
very-
no, 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 wait. If you're talking about start with SPY, going into any ETF which deals with the market, any the mutual funds, hedge funds, or just anything, all of them have these 4 stocks. You will not find that any single fund that has only 3 out of these 4 stocks. All of them have them, right? So I'm cherry picking. Okay, I'm taking 500 stocks of SPY, and I'm trying now to see, are they all equal? Are they somebody like okay, here is a Walgreen Booth stock, which is trading at $29 a share. A year ago it was 39. 2 years ago it was $59 a share. So yeah, it's paying dividend, and it's, of course, when the stock slides down, the dividends is growing. My core portfolio, believe it or not, I have WBA Walgreens.
Sasha,
And I just keep it there for dividend purposes. That's all. I'm not touching that stock. But if I will buy SPY, then I'm forced to own even more WBA shares that I'm completely against. This company sooner or later will go broke. We all know that. But as long as they keep paying these dividends, and I have only 200 shares, I don't care.
Companies that go broke in SPY are offset by companies that succeed in SPY.
But I want to have only those that succeed. I don't want to. I have these great companies and I have some garbage, so they will outweigh each other, and I'm doing okay. I'm against it.
People were buying in huge quantities. They were buying Enron.
Enron.
Yeah, how do you protect yourself against that?
And there's another story I'll tell on myself, which is back in the .com bubble, I got out a few months before it crashed, and I was patting myself on the back. But one of the things I did was buy corporate bonds as a safer asset. And one of the corporate bonds I bought was Lehman Brothers, because of course they were too big to fail, and fail they did.
Yeah.
Hey, y'all are having a fantastic conversation and everything, but Jim and Sasha and Milan, I've got a question of you, and it's actually a selfish question, not for myself, but for a relative and everything. I was just wondering, would you ever invest in something that is science-based or that is scientifically oriented? Because my cousin actually works for a company. He just recently became the COO of the company that is developing warp technology. So they are literally developing warp technology. So would you invest in something like that, or is that too risky of an investment because it is in the science field? Because you tell me you
Gene Roddenberry into it.
Huh?
If Gene Roddenberry is buying, then I am buying. No, I'm kidding you. But no, science would be one of my downfalls. I'm attracted to it, so I have to be careful. And when I invest in science, just because it interests me, rather than it's a good investment. So I'm careful with the scientific investments, but I'm not against them at all.
I'd like to ask you, have you seen the daily volume on AMD, Microsoft, Netflix, and what's the other one? Nvidia. What's the daily volume there? We're talking about 10 million shares.
Huge, yeah.
If not more. Okay. So if you are looking at the company which is trading 300 shares a day or even 3,000 shares a day, you cannot, in your right mind, to sell some of your star holdings and get involved into something which hardly trades or trades a few hundred shares a day. It's simply you might rather donate your money to charity just as well.
On the issue of trading volume, which is very important, the important thing with trading volume is to compare it today to what it was a year ago or 6 months ago. If the trading volume is rising, the market, the stock will rise. If it's declining, stock will decline. So to answer your question, Mark, we don't recommend buying individual stocks in core portfolios, but in fund portfolios, something that's science-based does make sense. But again, as we mentioned, as James mentioned, we have to look at management more than the area that you're in. And checking on management is very difficult. Unless you happen to know some people in management personally, you can take a look at the track record of the CEO and
Right.
the COO and the CIO, see where they've been in the last decade or so, and that'll give you a good assessment of management.
I still prefer to own cream of the cream of
Yeah.
SPY or any ETFs or any mutual fund or just anything. I would prefer to have that cream of the crop and eliminate all other 496 stocks.
It's
Which
very smart of you.
100% reasonable value.
Hey, Milan,
Yeah,
has
very
the
smart, Sasha.
put
It'll
call
almost
ratio
same-
changed at all?
Sorry?
Has the put call ratio changed at all since the last time I talked
Yeah,
to
the
you?
put call ratio, I think there's nothing in the market that works all the time.
No.
And, except I'll think of it later. But the put call ratio right now is strongly negative. According to the put call ratio, as far as this morning is concerned, is strongly negative, which indicates the individual sentiment.
Yes.
And individual sentiment
It's
collectively is a negative one. Right now it is. Then in the short term, the market will decline. You know that 4 or 5 years from now, it will be up, but in the short term. So the best return that you get on writing covered calls is 1 week away. The closer the expiry date is, the greater the percentage return. So if on a Monday you write a covered call expiring on Friday, you get the biggest return. And then the biggest return also happens when it's just out of the money for covered calls or just in the money for cash secured puts. Those are your best returns.
And,
They're virtually guaranteed.
and consumer sentiment is so fickle.
Hey, Jim, just to let you know,
I agree with that.
since my cousin is who I was referring to, he also worked for Nielsen McDonald's, was a military contractor, and worked for the U.S. Army. So I think he has a pretty good track record. Of course, I'm biased because he's my cousin, but definitely I think that those are some pretty good
Mark,
corporations that he worked
Good
for.
luck to your relative. We wish him all the best. Now, Milan, I would like to mention something that in the times like we are today, with this, there are some headwinds. Let's assume that. Actually, it will just help you to preserve your cash. If you are at this time, September, October, probably some of November, if you are becoming a very conservative, cautious, and my strategy here, so instead of selling close out of the money calls, if I own the stock, I would sell deep in the money option, which still will generate enormous premium. So let's see if NVIDIA, for example, costs now, say, $420 a share. Let's see if I will be exercised. I will not have any stock, but if I will, hopefully, I will still retain my position for 15 and higher by 15th of September. You know what I will do? I will sell 380 calls deep into the money. So now if stock will go low to 380, I am protected because I've got enormous premium. Now, if not, stock will be taken away from me. But because of the premium, I'm still a winner.
What do you mean by deep in the money?
I think you're talking deep out of the money.
No, deep in the money. Let's see NVIDIA.
Oh, yeah, right. Yeah.
NVIDIA, let's see NVIDIA, I got stock at 415. Now I own stock. What if, but it's September, so 15th of September, so we are going into the second half of September, all October, maybe some of November, when stock can go substantially lower. It may not happen, maybe stock will go higher. Right. So what I will do to protect myself, I will sell 380 calls while I own stock at 415. So I have now $35 protection all the way down, but actually it's more because the premium which I will get will be much higher than $35. I'll check it just for a second. What's the trading today? For example, NVIDIA, let's see if I go to options. And I will get, I'm not sure if that option even exists. NVIDIA now is $431.45, so it's recovering slightly from the morning time. But however, in options calls, I'm talking about, let's see, November 17, 22. That's what I would look. And I'm going all the way to, okay, here we go. $380. You know what's the premium today? $80.
Wow.
Can you imagine? Actually, I wouldn't mind to do that trade even today, except that I have to wait now until September 15th, because that's, although,
Right.
you know what? I wouldn't mind even now to buy back those, but I don't want to buy them back because I got paid $40.
Oh, yeah. If you buy
Yeah.
it back now, it'll cost you a lot more than you made. Yeah.
Not necessarily I will about break even, but I will then collect $80.
But do you mean by deep in the money? Do you mean that it's because it's at 380, and that's a
Yes.
lot less
Because
than the
380
current price?
is much below where the stock is today.
Yes, I
Or
understand
even
that.
415, whenever I will be, let's see, my stock will be called away or will not be called away. Let's see, stock will close on 15th of September, exactly 415. So I will keep all the premiums, which is not so bad. It's
Right.
$40 for each call I sold. So I keep that, and now I still have stock at 415. And now my next move will be very defensive, selling 380 calls, generating $80 in premium, and that's it. And I don't care from that point on what's going to happen with the
Yeah,
stock.
okay. Sasha, I've never done that before, and I'll have an answer for you next week. But
Okay.
for you this week is, why is there so little activity deep in the money selling? You know, when you take a look at the volume that's taking place over there, the further into the money you get, the fewer people are there. Less activity. Why
Interesting.
would that be?
Sasha and
Yeah,
Jim,
it's
and
so
everybody.
inviting. It's so inviting, and it seems to be an easy way to make up. You know, I keep telling people, as soon as you find an easy way to make a buck, call me, and I promise to do the same for you. Now, it seems to me that you have found it. Why is there so little volume there?
Because, of course, they're very seldom trade, because a lot of people, they see NVIDIA as a very aggressive investment, and they would rather buy not 380 calls, but 480 calls.
Yeah.
Because if they're right and NVIDIA will fly, they will make money. Now, to buy 380, mostly I'm talking about the specialists, the money makers. They must provide bid and ask for any position on that given stock. So that's why this position, what I just mentioned, it's not liquid position at all. And you could be right suggesting that I will take a hit on bid and ask price and the liquidity problem and so on, and I'm prepared to do it. So even if I will generate, instead of $80, only $79 or even $77, I don't care.
Hey, Sasha and Milan and even Jim, I've got a question about a fund portfolio item, because it is something that is very popular, and I just recently realized that they are on the NASDAQ stock exchange. I'm not sure if they're on the Canadian or other stock exchange, but for those people that are looking at social apps and looking at social things in that space, I just realized that both eHarmony and Match, which are dating apps, are actually literally on the NASDAQ. So are those worthwhile buys? Because so many people are trying to find their other half, whatever that other half is.
I'd swipe left.
Or 20.
I'd swipe left, Mark.
You would swipe left?
I'm not sure what that means, but no, I'd pass.
You pass?
But your relative who is in science-based investments or companies who is doing that, we need to replace manufacturing with innovation. Manufacturing very often is a very boring job. Going into a plant and pushing rubbers into the end of pencils all day long, or doing the same job over and over and over again, not very satisfying. Those people look forward to Fridays and they hate Mondays. And so eliminating manufacturing, if we can replace it with innovation, is a good way to go. And that's possible. For instance, the auto union workers now are concerned about being replaced by electric car manufacturing because it takes a lot fewer workers to make an electric car than it does to make an internal combustion engine. They're going to lose some jobs. So they're pushing for a 38-hour week. Now, when I was a student that worked on the railroad, we had a 60-hour week. That was the norm. Today, a 40-hour week is the norm. Could we, and we're doing much, much better, could we go to a 30-hour week and do better? Possibly we could, by being more effective, more efficient, and by going into innovation and replacing manufacturing with innovation. And that's probably a worthwhile objective for our society, for advanced societies.
Amen.
Yep, definitely agree with that.
Yes, agree, Milan. Absolutely. That's wonderful. I'm looking at a very specific situation on very specific stocks. I'm not really great at looking macroeconomics, inflations, the political trends, or so on, because you have to separate your ability, your intent to make money, and to look into some other things that you may enjoy talking about, or maybe you don't. But that's completely separate issues. It does not help you to make any money. So because it's an investment show, modern investing and so on, I'm trying to focus on ideas that will help you to make money in a short period of time or long period of time. Either case is okay with me. And this is what I'm trying to provide my views to our listeners and to everybody who's listening to this.
You're absolutely right, Sasha. And the one caution that I would make is when, like, I was thinking about, before I bought, I was thinking about buying Taiwan Semiconductor Manufacturer. And I had to consider, what if China invades Taiwan?
Yeah, exactly. Yeah.
And so there are the ways that you must pay attention to what's going on in the geopolitics, and you're going to have to pay attention to the world at large.
This is why stocks that I mentioned I own, they don't provide any political risk or so on, because
yes,
they're not.
So you would eliminate that.
Yeah. I eliminate political risk at all.
China has seen Taiwan as a part of China for years and years.
Oh, yeah.
Yeah.
Yeah. Yeah, we all know that. But anyway, that's Jim. I think it's already in stock pricing of Taiwan Semiconductor.
Yes, I agree.
So
I agree.
it's not a big threat, in my opinion.
Well, and well, this is getting off the topic, but after what Ukraine did, stood up to Moscow, it's like, maybe China's not thinking it's going to be so easy.
Well, this is why it's so important to let Ukraine to win this war. Because winning this war, it will lead to dissemination of Russian Empire. And without Russian Empire, China will not be so bold as to claim that they want to invade Taiwan, if they want to do this or that. They are leaving, they're very practical for more than anything else, and they will see where it all leads. This is why on a recent conference in Arab where is it? Saudi Arabia. China was joining many other countries supporting ideas that Ukraine has to be in its borders as of 1991 when Soviet Union collapsed. So this is sort of a main idea. Okay, there are a lot of steps that would have to be taken to achieve all that. But right now, the situation is very simple. By providing ATACMS missiles and F-16 air fighters, the war could be won by Ukraine very, very quickly.
But for investors, if everybody just cooperates and gets along and we take out all this invasions and warfares and all that kind of stuff, which costs everybody money, except for the arms dealers and makers, you basically have a stable world environment, and that's where you can do more business. So, it's in everyone's interest. It doesn't matter what country you're from. It doesn't matter what language you speak.
Jim, tell that to Ukrainians and Russians. Interesting how far we will go with them, with this idea. they are not in the minds of making money. Ukrainians are of the mind to protect their territory
Totally understand.
and have their country in place, because right now Putin is threatening to annihilate all Ukraine, its citizens, and it's
Yeah,
a
he's a
genocide.
terrorist. He's a terrorist. There's no question about it. You know, but
It's totally a terrorist act. But speaking of making money, Milan, you'll be glad to know I literally broke even and everything, but I only broke even because I was bored. And yes, I admit I was bored and I had a spare dollar. So I bought a lottery ticket, a scratch off, and I literally won back the dollar that I spent. So,
Hey.
the dollar that I spent. So
preservation of principle.
So I spent $1, I won it back because that's what the scratch off amount was literally you won $1. So I spent $1, I won it back.
Mark, that excellent story to finish today's program. I would like to thank you very much for participating in it, and see you next Wednesday, same place, same time. Bye-bye, everybody.
Thank you.
Take it easy.
Thank you, Sasha.